So all you need to do is say, listen, what you're doing there is you're taking away that probability of the long-term trend bailing you out. Right? If the number go up over time, this number does not go up over time. So therefore, say, okay, I understand what I did. I got too greedy with my mental model of I can make 100x. And just come in a bit and say, can I make a 5x? Can I make a 10x? Now, in normal markets outside of crypto, that's monstrous returns. Mm-hmm. In crypto, that requires you to hold Bitcoin for 2 years or 3 years, or to find something in the top 20 that's moving, and it might take you a year.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge.
Raoul Pal says 99% of traders will be replaced by AI. We'll explore why, how, and what's next. Let's dive in.
I think if you think of where do humans have an edge? When it comes to prediction of markets overall, we don't. And we've kind of proven it by a lot of systematic hedge funds, people like Renaissance Capital, stuff like that. They figured out the computers actually do it better than humans. Computers are not very good at long-term time horizons yet. Their probabilistic outcomes of longer-term, like macro time horizons, are not good, but they're catching up fast. And I see it when I interact with mine. There are other things that are coming that are interesting, prediction markets. It's basically another trading market. Mm-hmm. We've also got endless new markets because of crypto. 1 million tokens. You could trade a lot of things. Yes, they're highly correlated. So how fast will that capital start to come fully into this? It's going to take time. So everyone's got time. There's no need to panic. But then you think about it. If you're betting on a human-to-human experience, let's call it a football game and you're at the game, or a boxing match, or whatever it may be, there'll be ways of doing it, but you're not trading markets, you're trading different things. The other thing that we're seeing the rise of is the rise of the attention economy. This is what we're doing here, right? Yeah. It's attention. Attention is upstream of everything in humans. And so the attention economy, we've seen it with meme coins and other things. I think it's only just starting. So what could that be? What could it be that maybe we can do that the machines can't? Or maybe it's too small a market that the machines aren't focused on it yet. I don't know. All I know is we've got a period of time from here to then, whatever then is. It's got 2032. Let's give that as the date, 2030, that we can figure some of this stuff out. Because you'll see the changes happening faster and faster and faster. You know, what you put into your ChatGPT today with your chart, in a year's time, it'll be developing a whole trading system and using an agent to do it for you. I mean, that's here now already. It's just not many people know how to do it, but soon you'll just be able to talk to your ChatGPT. And that's the other thing. If you're nervous of using the technology, talk to it. It's amazing. You go on voice mode, and you just talk to it like a human and ask it questions. You can then feed your trading track record in and say, well, what am I doing right? What am I doing wrong? How should I think about it? How should I adapt? It'll do all of this too. You know, hey, I read this chart this way. Talk me through how I could have done it differently. It's, you know, there's all of these things you can do to prepare. Post that, I honestly don't know. I call it the economic singularity because it's like this black curtain of which you cannot see the other side. And anybody who pretends they can is lying. We just don't know. We just don't know whether financial markets exist because they've become too perfect. How does it work also? If you're trading equities, think about trading some tech stuff and you've got some sort of SaaS business model. Well, right now almost, you can put it into Replit and it can build a website with all of the functionality. 3 minutes? 5 minutes? So then what moat does any business have? How do you invest? So then they all become attention. How much attention can they get for how long? And is there any moat at all? And probably most of them don't have a moat. So in which case, then you're really short-term time horizons. And if you can see it through the world of meme coins, that everything just has attention and attention can die as well, then maybe you can survive what comes, where businesses grow like that and disappear like that. And it kind of doesn't matter. It becomes the new normal. So there's a big signal in trading of crypto, because you're trading bleeding edge of technology and use cases that people don't even see what they are yet. So if you think about memes as well, not only are you trading attention, you're also trading instant capital formation. So it's your chance to be a venture capitalist in real time. So somebody can put this idea out on the internet, launch a token, it can accrue $2 billion, $10 billion of value in 2 hours. And it can grow from there, or it can die from there. Exactly the same as a VC opportunity. So it's like speed running VC, but access for everybody. Well, that's an incredible thing. So if we've got a technological revolution going on at every level, whether it's blockchain or all of technology itself, and you get a chance to get access to these things really early stage, and you can build a VC portfolio of 20 of these bets or whatever it is, some of them work, some of them fail. Okay, that's a whole new opportunity set that wasn't around ever before, because most people don't pass the accredited investor rules, which apparently tells you unless you've got $1 million, you're stupid.
Yeah.
It's ridiculous.
China has made a surprising comeback as the world's third largest Bitcoin mining hub, despite its sweeping 2021 ban on cryptocurrency mining and transactions. The move back then was meant to control financial risks and stop the use of digital assets for illegal activities. Yet 4 years later, miners in China are quietly finding their way back, especially in the vast, energy-rich region of Xinjiang. According to Luxure's latest global hash rate map for Q4 2025, China now contributes about 14.05% of Bitcoin's total computing power, roughly 145 exahashes per second. That's a slight rise from the previous quarter and enough to place the country just behind the United States and Russia in global mining rankings. Experts believe this underground revival is fueled by Xinjiang's cheap electricity and remote infrastructure, which make it ideal for discrete operations. Meanwhile, Bitcoin itself is showing strength again, trading around $111,700 and supported by a global hash rate of over 1,137 EHS per second. Proof that China's miners, though silent, are still helping power the world's biggest digital currency.
The further you're out on the risk curve, the less likely it just accumulates over time, like Bitcoin does, which is the closest end of the risk curve, the least risky of crypto assets. So when you go that far out, they tend to be boom busts, and 1 out of 1,000, 100,000, a million actually scales to something much bigger. Dogecoin did it, for example, many years ago. So all you need to do is say, listen, what you're doing there is you're taking away that probability of the long-term trend bailing you out. Right? If the number go up over time, this number does not go up over time. So therefore, say, okay, I understand what I did. I got too greedy with my mental model of I can make 100x. And just come in a bit and say, can I make a 5x? Can I make a 10x? Now, in normal markets outside of crypto, that's monstrous returns. Mm-hmm. In crypto, that requires you to hold Bitcoin for 2 years or 3 years, or to find something in the top 20 that's moving, and it might take you a year. Like one of the tokens I was in last year, and sort of still, it's my main holding, is Sui. It's a big project that came out of Facebook. It's not a fly-by-night thing. I mean, that did 5 or 6x last year. Solana did it the year before that. So, okay, that's a lot easier. So then let's say you don't enjoy the time horizon that I do, which is actually doing nothing. Most people want to do something. Okay, so let's say you've got a reasonably fast-moving asset that's proven and is towards the Bitcoin end of the risk curve. Then you know over time that your best bets are going to be to try and buy the dips and then flip them out when it makes new highs, because you've got the skew of the market's directionality. So I understand why you came for the 100x. And that's a statement about what you want out of your life. That's okay, but really, you can make your life a lot easier if you truly are trading to make money. A lot of people actually just trade for the adrenaline. It's gambling at that point. And you have to be honest with yourself, is why am I doing this? Am I doing it because it makes me feel something? Am I just betting on the horse racing or whatever it is? Or do I actually want to change my future? Am I doing something my future self will thank you for? It's not going to thank you for that, because 99.99% of people don't make any money out of that.
JP Morgan is making a bold move into the digital asset world by allowing institutional clients to use Bitcoin and Ethereum as collateral for loans by the end of 2025. The global program will rely on trusted third-party custodians to securely hold the pledged crypto, ensuring safety and transparency for both the bank and its clients. This marks a major evolution from JP Morgan's earlier stance, when it only accepted crypto-linked ETFs as collateral. Now, it's directly recognizing Bitcoin and Ethereum themselves as valuable and usable assets. The timing couldn't be more interesting. Bitcoin recently hit a record high of $126,251 before pulling back, showing both the potential and volatility of the market. As regulations become clearer under the current U.S. administration, Wall Street's biggest names are accelerating their crypto integrations. Once a skeptic, JP Morgan CEO Jamie Dimon has softened his tone, saying he defends people's right to buy Bitcoin even if he personally doesn't support it. With peers like Morgan Stanley, Fidelity, and State Street expanding crypto services, JP Morgan's new approach signals a powerful shift in traditional finance. Digital assets are no longer on the sidelines. They're being woven into the very foundation of global banking and lending. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time,